For Morningstar, I'm Jeremy Glazer. After last week's disappointing jobs report, many are wondering if the economy is still on track. I'm here with Bob Johnson. He's our Director of Economic Analysis to look at some of the data that we saw this week. Bob, thanks for joining me.
It's great to be here today.
Let's start with jobs again. We got the JOLTS report, which is on job openings and turnover and quits. Can you tell us, how many openings we're seeing?
Well, we had more good news out of that report, and we had over 5.1 million job openings, which ticked up from under 5. So it was an acceleration in the openings, which took everybody by surprise. Number was better than anybody was thinking. And so certainly it was a very positive report. Maybe contradicts the labor report a little bit that we saw last week. Not horribly so, but it certainly seems to indicate maybe there's more underlying strength in the data than we thought.
When you look at the sectors that have the most openings, what parts of the economy are seeing more tightness in the labor market?
Yeah, and that's fascinating because, one of the things we like to look at is the number of job openings that are out there and compare that number to the number of unemployed people in that same industry. And when you get under 1, that tends to be the point where, you got some shortage, you've got some real issues, and wages have to go up or something kind of needs to adjust relatively quickly. And we've had the business and professional services category, which is a very high-paying category, under 1 for a few months here, and it kind of normalized a little bit. It's right at 1 right now. But joining them was the health sector, where the number fell under 1 for this particular month, which was really great news, at least from our labor scarcity theory. It kind of cements the idea that we've got a tighter labor market. So now we've got 2 of the 11 major sectors under 1, which is really seems to indicate that maybe the shortage situation is for real. And of course, we've seen the whole thing with all the retailers, the Targets and the Walmarts raising their minimum wage. And then just a little bit more recently, we had the McDonald's situation where they lifted their minimum wage. And certainly that's going to have a broader impact on the economy.
So it seems like maybe that jobs report looks like it was maybe a little bit of an outlier, it's kind of some noise rather than a sign the job market is falling apart.
Absolutely. And I'm not saying that things are great and that labor got a little bit ahead of themselves. We needed a month of adjustment. Maybe we even have another one. But things are not falling apart. And as we've said last week, there was a real odd thing happened with the restaurant worker jobs that looked artificially low. It was really high the month before, so that distorted the number by about 30,000. So the report wasn't wonderful. There's no doubt about that, and we expected it not to be so good at some point. But now we'll have another couple months of leveling off, and then maybe we'll get back to over 200,000 again fairly quickly.
All right, let's turn to housing, another area of the economy that's been reasonably weak, bad in 2014,
yeah.
Not great so far this year. What are we seeing in terms of housing prices? We did get some data from CoreLogic this week.
Yes, some green shoots are there, and this is just another one that home prices are really kind of accelerating a little bit again, which can be good news and bad news. But the year-over-year price change on a 3-month moving average kind of bottomed back in December at 4.9%, and now we're back up to 5.3% on the CoreLogic data through March. So we've kind of moved back again. We had estimated for the full year we'd be in the 4 to 5% range and kind of think we'd have an ongoing pattern going down until we hit 4. But now we've bounced back, and if you asked me today to make my forecast, I'd say we look like 5 to 6% home price increases. So certainly an indication that things are a little bit tighter out there. We've seen relatively weak inventories, and that's beginning to move prices upward.
You mentioned there are other green shoots in the housing industry. What else are you looking at as potentially a positive sign there? Yeah,
certainly we saw the pending home sales last week look better with kind of 3% growth. So we've had a few months of sequential growth. And we've also had double-digit year-over-year growth in pending home sales. So that's good news for the existing home market, which was actually down in 2014. So glad to see that. And then the other key metric is new home sales. We've had 2 months in a row where we've been up over 500,000 new homes sold. And remember, new homes isn't always our favorite metric to use because it includes not only the houses that kind of started and that you're working on right now that somebody's bought, but they also include homes that are still on the drawing board. Somebody says, I like that model home, but I want one of those and build it separately for me, and they haven't broken ground yet. And then on the other end, you've got homes that have been sitting on the lot for a while that can be sold. So you can have those sales do relatively well without having the starts numbers do so well. And in fact, they will tend to drag the starts up in the months ahead. So we felt really good about that new home sales report. So I'm not as worried about the housing market as many others are.
Last week we had disappointing manufacturing news from ISM. This week we got the ISM Services Index. What did that show us?
Yes, the services number was at 56.5, was down just a touch from the previous month. But at 56.5 is still a very high number. And services is 2/3 of the economy, manufacturing's about 1/3. And one of the things about this piece of data is that it was stronger than everybody expected as well. So, everybody said, oh, well, the manufacturing's weak last week, but it seems like maybe the problem's more isolated in manufacturing and that it hasn't really spread over to the services economy, which still looks relatively strong based on this week's data.
So there are signs that maybe some of these oil issues are kind of the big driver of some of this weakness potentially.
Yeah, absolutely. And on the manufacturing side, if housing had everything go wrong in 2014, manufacturing had everything go right. And now with the oil situation kind of reversing, autos off to a weak start, now improving, however, that really drove manufacturing. So it didn't look so good for a few months here, but I think maybe even there we'll be nearing a bottom relatively soon.
Bob, thanks for your update on this data today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.